Good evening. Thank you all for joining us for Congresswoman Sherrill's Tax Resources webinar. We apologize she was unable to join in person today, but we have a great program planned. My name is Chris Williams. I work in the Congresswoman's Livingston office, and I'll be your host this evening. So we're just 1 month inside before tax day, and we want to take the opportunity to share information with you regarding the filing process for this year. We're also very excited to share information on the clean energy tax credits and deductions that have been made available under the Inflation Reduction Act. These are helping Americans reduce energy costs, and we want to ensure you're aware of them, that this federal support is available as you are considering home improvements, updating appliances, or considering purchasing a new vehicle. Just a few things to cover before we begin. If you have a question, please use the chat box on your screen. Our staff will be reviewing these for the Q&A portion of today's event, which will be towards the end. Please keep in mind that this webinar is being recorded and will be publicly available, so please refrain from disclosing any personal information with your questions. We're going to get to as many as we can as time allows. If for any reason we're unable to get to your question, our staff will follow up with you directly afterwards. We're also happy to share copies of the slides that you'll see today, along with some other helpful resources provided by the agencies. And again, this is being recorded and we will post this to our YouTube channel as well. And with that, I'll introduce our panelists. Joining us today, we have Monica Conover from United Way of Northern New Jersey. She's going to cover their Volunteer Income Tax Assistance Program. After that, we will hear from Erica Sun with the Taxpayer Advocate Service, who's going to cover this year's filing process and give you some information on avoiding scams. And lastly, Kate Hanyadi will walk us through the clean energy credits under the Inflation Reduction Act. So thanks again for joining us, and let's get to our panelists. Monica, you're up first.
Thank you, Chris, and thank you for having me here today. So I'm just going to quickly talk about the Volunteer Income Tax Assistance Program, or VITA. This is a program that's funded by the IRS, and we provide free tax preparation for low-income wage earners here across. It's actually across the United States, and it's available here in Morris County, along with other counties here across 21 counties across New Jersey. We have volunteers that are IRS tax law certified to provide this service. We have, you can contact us. I did provide our link here in the chat box that they can either go make an appointment with one of our, preparers. There is also a virtual portal that folks can upload their documents and have their taxes prepared virtually, or we can provide free software where they can prepare their taxes, both their federal and state, for free. And we are available to coach if they have questions. So that's just our quick commercial about our volunteer income tax assistance.
Thanks, Monica. United Way is a great organization. They've been very helpful to our constituents that have had issues. We've referred a number of people over there, so we can't thank you enough for being a resource and helping out our constituents.
We always appreciate and like to help whenever we can.
Of course. And we'll make sure everyone gets that contact information as well. We'll share that in our follow-up email.
Great. Thank you.
Next, I will turn it over to Erica with the Taxpayer Advocate Service. Give me a second. I will pull up Erica's slides. Okay, go right ahead, Erica.
Great. Thank you so much, Chris, and to Congresswoman Sherrill for inviting us today to speak to your constituents about the Taxpayer Advocate Service. The Taxpayer Advocate Service is an independent agency within the IRS, and we help taxpayers who have a tax problem with the IRS. And we serve Congresswoman Sherrill's constituents. So if you have an issue with the IRS, please let the Congresswoman's office know, and we will work on your case through the office. So today I'm going to talk about some pre-filing tips so that you can avoid delays in having your tax return processed. So see. Okay, so before you actually prepare your tax return, if you're doing it yourself, or even if you go to Preparer or to the VITA centers to have your tax return prepared, it's important that you go through certain things, certain requirements to make sure that your return is prepared accurately. So I'm going to go over some of the tips. One of the most important things you can do is make sure that you have all your tax documents. For example, Form W-2, your 1099, your 1099-K, Schedule K-1, etc. Your employer generally has until January 31st to send the year-end wage statements. Typically, these forms start arriving in the mail after the beginning of February, but some employers send them digitally. Make sure that this information is correct, and if it's not, then you should contact the payer immediately. As you may or may not know, employers, financial institutions all send information returns to the IRS. These information returns, the W-2s, 1099s, etc., that information is matched against what you put on your tax return. And if there's a mismatch, or if there's information that's missing, then the IRS could assess you additional tax, or they could, delay the processing of your return and ask you for additional information. So it's important that you have all your documents correct and all of them input into the tax return so that there's no delays in your tax processing, or there's no issues with the correct tax being assessed against you. So as I mentioned, if there is some sort of mismatch between what's on your return and what the IRS computers have, the IRS has a department called the IRS Integrity and Verification Operations, and they will ask for proof of certain information that's on your return if it doesn't match their tax documents in their database system. So for example, if you reported, that you paid $300 in federal income tax, but your employer reported only $30, then the IRS is going to stop the processing of your return until you provide verification of your what you reported, or you may need to file an amended tax return if the information is not correct. Sorry, Chris, can you go forward 2 slides? Okay, great. All right, so one more. Okay. Also make sure that you check your information on your return, like you make sure that the social security numbers are correct, the ITIN numbers, dates of birth, addresses, names. Especially important is your bank account information. So just make sure that all that information is correct, because if there's a mistake, it could delay the processing of your return. Next slide, please. Okay. Also make sure that you claim all the deductions and credits for which you are eligible. There are, if you go on the IRS website, they tell you what credits and deductions are available. So you can check and see which ones are eligible for, if you go to the next slide, there's a link, credits and deductions on the IRS website. The IRS also has an interactive tax assistant tool to help you determine if you're eligible for certain credits or deductions. So you should look at the website and see if any of them are applicable to your situation. Next slide, please. With regard to the earned income tax credit, remember that there are certain rules with that, and to help you determine if you're eligible for the earned income tax credit, there is an EITC assistant tool available on the IRS website. So it'll help you to understand whether you're eligible for that deduction credit. Next slide, please. And there's more information about the EITC. Next slide, please. And there's some common mistakes that are made, such as claiming a child that is not, doesn't meet the residency or the relationship requirements, reporting income or expenses on Schedule C, particularly incorrectly, filing as single or head of household when married, or the name and Social Security having errors in it. So making sure that these issues don't come up on your tax return. Again, please look at the IRS website to see if you're eligible for the earned income tax credit. Next slide, please. I think this is the same slide, sorry. This is about credits and deductions, okay? Next slide. There are also credits available for other dependents, which include dependents who are age 17 or older, dependents who have individual tax identification numbers, dependent parents or other qualifying relatives supported by the taxpayer, or dependents living with the taxpayer who aren't related to the taxpayer. And there's more information on about these credits on the IRS website. Next slide, please. There are also credits available for education expenses. Schools generally have until January 31st to provide the form 1098T. They can provide it by mail or electronically. So make sure that you review the form 1098T for accuracy, including the amounts paid, to prevent possible issues claiming this credit. Next slide, please. There's also information here about the premium tax credit. It's a refundable credit that helps eligible individuals and families cover the premiums for their health insurance purchased through the health insurance marketplace. And you can find more information about this credit as well on the IRS website. Next slide, please. Make sure that you attach all the forms and schedules before you submit your return. I believe that when you file it electronically, it's sort of available as well, but make sure you keep a copy of all your documents and a copy of your return. And make sure that that if you received any interest payments, that those are also reported if they're more than $10. Next slide, please. This is about tax help. As Monica mentioned, she works for VITA. They also have tax assistance available for the elderly. On the IRS website, if you go type in VITA, actually you can find a free tax assistance by typing in your zip code. You can also file your tax return for free. They did roll out a program for IRS software, but New Jersey is not one of the states included in this trial for the software. It may be available next year. And there's also a list of tax professionals who are credentialed that you can see and determine if you want to hire them. And also there's information about filing returns and choosing a tax return preparer. Next slide, please. It's recommended that you electronically file your tax return. The IRS is very efficient with electronically filed returns. I know not all the forms are available electronically, but to the extent that the form that you need to file is available, it's best to file electronically. Paper processing of returns does take an extraordinarily long time. It's gotten better in the last few years, but it's still not as quick as an electronically filed return. And also, there could be errors in terms of if you file a paper return, the processing of it is not, again, efficient. So forms could get lost, information could be misread. And so it's basically scanned and then it's converted to something called OCR. So it's really important that if you can electronically file your tax return, that you do so. Next slide, please. Make sure that if you file it by paper, that it's filed with the correct address. Next slide, please. If you need tax information in another language, the IRS is actually provides a form that you could fill out and request IRS notices be sent to you in your preferred language. Next slide, please. So you can go to the IRS website and fill out the form so that you could receive information in the language of your choice. There is also the Taxpayer Advocate Service. We have our website in both English and Spanish. If somebody Spanish speaking needs to reference our website. Next slide, please. Okay, so this is the form for requesting your language. It's called Schedule LEP, Request for Change in Language Preferences. And you can fill that out to have notices sent in a different language other than English. Next slide, please. We also have over-the-phone interpreter services. Okay, and next slide, please. And we also provide tax products in Braille or large print to be more accessible. And that's also can be requested by calling this telephone number, 800 tax form. Next slide, please. So you can use Form 9000 to request tax notices in Braille or large print, or you can call the tax assistance telephone number. Next slide, please. Again, you can call the accessibility helpline to request tax products, tax notices in Braille or large print, or some other medium. Next slide, please. Okay, so this is questions. I'm going to take questions after the scam presentation. We at Taxpayer Advocate Service also have a self-help page, so you can see if you have any issues that are covered by that. And then we also provide help with tax, any other tax issues. So Chris, can you show the other presentation?
Yes, 1 second.
Okay, great.
Bear with me 1 second. Are you guys seeing the presentation mode, or
Yes,
is it?
yes.
Okay,
I see
great.
it now. Thank you. So every year, people, scammers, come up with new ways to try to defraud people. So just wanted to give you a heads up on certain scams that are going on. Doesn't cover everything, but some of them are that we're aware of now. Next slide, please. Okay, so typically these scammers are posing as IRS agents or a tax return preparer. They may text your phone or tell you that you owe money or eligible for a refund. So the whole idea is to get your personal information and your money. It's sometimes it's hard to tell, I guess, who's legitimate, not. They're very sophisticated, but the IRS has actually stopped sending revenue officers to make visits, because in the past, collection revenue officers would visit taxpayers at their homes or businesses to verify some information or to request. So they don't do that anymore. So I think a lot of also companies are aware of, like, if you have a tax lien filed against you, and they may get that information from public sources and then reach out to you. It's best, obviously, to verify if it's a legitimate company or person before you decide to give out your personal information. And also, just be very, very careful that they're very sophisticated now. So be wary. And if you're not sure if somebody's legitimate, you could always reach out to us and try to verify if you're not clear if they are. Next slide, please. Okay, so the top tax scams for 2023 were the employee retention credit, and then phishing and smishing, online account help from third-party scammers, false fuel tax credit claims, fake charities, unscrupulous tax return preparers, social media, fraudulent form filing, bad advice, spear phishing, and cybersecurity for tax professionals, offering compromised mills, schemes aimed at high-income filers, bogus tax avoidance strategies, schemes, and with international elements. I guess that employee retention credit, that was a big a source assistance that the IRS or Congress provided for small businesses or during COVID, and a lot of scammers did take advantage of that program, and a lot of taxpayers unintentionally may have filed that claim. So it's very important that you make sure that it's a legitimate program before you sign up for something. Next slide, please. So as I mentioned, the employee retention credit attracted a lot of fraudulent return preparers who took advantage of this program and had taxpayers file fraudulent returns, and a lot of these returns also caused problems for legitimate returns, and so these were extremely delayed, and so a lot of legitimate returns weren't processed quickly, and so the IRS had to filter through all the illegitimate returns. So it was a problem, and taxpayers who unknowingly may have filed these type of returns, even though they weren't eligible for it, unfortunately, they have to face the penalties and not the unscrupulous return preparers. So it's just really important that people, if something sounds too good to be true, they should be very careful about what they are signing up for. Next slide, please. The way that these promoters lure victims is through aggressive marketing, direct mailing, and leaving out key details. So it's important that you educate yourself about what these programs really are and who they're intended for, and not necessarily sign on for certain things without knowing fully what you're getting yourself into. Next slide, please. Some of the warning signs of the employee retention credit were easy application process, or statements that the promoter company made that they can determine the ERC eligibility within minutes before discussing any of the employer's tax situation, large upfront fees to claim the credit, fees based on a percentage of the refund, promoters telling businesses to claim the ERC because they have nothing to lose, promoters telling businesses to ignore the advice of their trusted tax professional. So these are the typical tactics that these promoters will use. Next slide, please. So here's some information about eligibility requirements. If if you're still interested in the ERC, although the program is, I think, almost over now. Next slide, please. Yes, that continues eligibility questions. Next slide. Oh, there's these false fuel credit claims. The fuel credit claim is meant for off-highway businesses and farming use, and as such is not available to most taxpayers. However, some people have been claiming these credits, unfortunately, and it's delayed the processing of the return, and they've had to file amended returns because they didn't realize they weren't really supposed to claim these credits. Next slide, please. Some other schemes are fraudulent form filing and bad advice, Form 8944 fraud, and Form W-2 fraud. The scam emails display the IRS logo and use subject lines such as tax refund payment or recalculation of your tax refund payment. So most times IRS will not email you, and the IRS will not call you. They usually send you letters, but sometimes I guess you have to be careful if it's really a legitimate letter from the IRS. Next slide, please. The IRS has, you can verify the information. The IRS has a forms repository with legitimate and detailed instructions for taxpayers on how to fill out the forms properly. You can check that on the IRS website. And the IRS does have an official social media account. Next slide, please. Be careful of unscrupulous tax return preparers. The signs of these tax return preparers, kind of illegitimate tax return preparers, are when they ask for cash only without providing receipt, invent false income to try to get their clients more tax credits, claim fake deductions to boost the size of the refund. They refuse to sign the return, or they ask you to sign a blank return, or they charge a fee based on the size of the refund, or direct the refund into their bank account. So always make sure you check their credentials. Ways to spot tax scams and IRS impersonators: they'll call you first, they'll leave you a pre-recorded voicemail, they're emailing you, they're texting you, they're contacting you via social media, and the form they're sending or referencing doesn't appear on the IRS website. Again, similar information, make sure that you avoid these scams, and these are the list of typical scams, the ways that try to lure you. Next slide, please. The next slide after that too. Okay, great. So if you determine you've improperly claimed a credit or a deduction, what you can do is you could file an amended return as soon as you realize that a mistake was made. Next slide, please. If you claimed ineligible credits or deductions based on a fraudulent advice, you should also file Form 3949, information referral. And you could also file forms about return preparer complaints or fraud or misconduct. These are also forms that are available to you. Okay, next slide, please. the taxpayers' Bill of Rights, these are important rights that you have in understanding how you can work with the IRS. And everybody within the IRS is trained to protect your rights, but sometimes these rights are still not upheld. So this is information about your rights. Okay, next slide, please. If you want to know more information, you can check our website, and it provides a wealth of information about the various topics I've discussed today. Next slide. We also have some tax tips also available, and then questions. Okay, so I guess I'll wait for questions at the end after Kate's presentation.
Yes, we'll have a Q&A portion towards the end. Erica, thank you very much for that helpful information. The Taxpayer Advocate Service is another great organization that's been very helpful to our constituents. So if you ever need help with a return, anything outstanding, you can reach out to them directly, or you can go through our office as well. We're very happy to assist you there. Next, we have Kate Hunyadi. She's going to discuss, she's with the IRS office here in New Jersey, and she's going to talk about the clean energy tax credits through the Inflation Reduction Act. If you bear with me for a moment here, I'll pull up her slides. Okay, go ahead, Kate.
Okay, great. Thank you so much for having me. I'm very happy to have the opportunity to speak with you all this evening. I'm going to be talking about the Inflation Reduction Act's clean energy provisions for individuals, like Chris said. The Inflation Reduction Act, or IRA, makes the largest investment in clean energy in our nation's history, and much of that investment is delivered via tax incentives. In fact, nearly 3/4 of the IRA investment is delivered through tax incentives. These various tax incentives do cover a broad range of activities, including more than 20 clean energy tax provisions for individuals, businesses, and government entities. And the Internal Revenue Service is the federal agency responsible for administering the tax code. And as such, we are proud to be playing a central role in implementing the Inflation Reduction Act's clean energy tax incentives. Next slide, please. So today we're going to talk about two credits, the residential energy credit and the credit for clean vehicles. As you can see, there are two parts to each of these credits. The residential clean energy credit and the energy efficient home improvement credit make up the residential energy credit. And then the clean vehicle credits have something for new clean vehicles and previously owned clean vehicles. Please do note that our conversation today will be focused just on individual taxpayers claiming the credits on a 1040 tax return. While we're not discussing clean energy credits for businesses, nonprofit groups, or other entities, there is a lot of information available on those types of credits at irs.gov in the clean energy section. Next slide, please. Okay, so first let's talk about the residential clean energy credit. This is a credit for the installation of solar panels, including solar shingles, solar water heaters, wind turbines, geothermal heat pumps, fuel cells, and battery storage may also qualify. The current amount of the credit is 30% of the qualified expenses paid, and this does include the cost of installing the products. I do want to mention that this particular credit is considered a non-refundable credit. So what that means is it can reduce your tax liability even all the way down to zero. But if there's excess credit that you don't use during the current tax year, it will not be issued to you as a refund. That said, this credit does have a carry forward provision. So if you do end up having excess credit that you can't use in the current year, you can carry it forward to offset a tax liability in a future year. So you don't miss out on it. So moving on to the energy efficient home improvement credit. This is also 30%, and this applies to improvements like exterior doors, windows, skylights, and insulation, central air conditioners, water heaters, furnaces, boilers, and heat pumps, biomass stoves and boilers, and home energy audits. And the maximum amount of the credit is $3,200. This credit is for improvements that are made only to an existing home. It cannot be claimed for a newly constructed home. And to further complicate matters, some of the energy efficient improvements are subject to a $1,200 maximum credit per year, while others are subject to a $2,000 maximum credit per year. So when you add the two together, that's how we get to the total credit of $3,200 per year. So the maximum credit for purchasing the heat pumps and water heaters and biomass products, those fall into the $2,000 category, and then everything else falls into the $1,200 category. If you're not confused already, you might become so, because in this $1,200 category, each of the individual energy efficient improvements there also has its own maximum, but we'll take a look at it and talk about it. And I think it'll make sense when we do so. So next slide, please. So there are 3 categories of items listed here. There's building envelope components, qualified energy property, and then the home energy audits. And these are the 3 categories that can be combined to get to the $1,200 part of the credit. So you might see there under building envelope components, the credit for an energy efficient exterior door is a total of $500. And that's actually a max of $250 per door. So the $500 would be for 2 doors. And then for windows and skylights, the maximum credit is $600. And then insulation is $1,200. If you look at the second category, the qualified energy property, that's much more straightforward. All of those items are subject to a $600 max. So that's a little bit easier. And then the home energy audits are up to $150. So let's just talk through an example to maybe kind of make it a little more clear. So the maximum credit for insulation is $1,200. And if somebody were to install, let's say $4,000 worth of insulation, the credit would be $1,200 because 30% of the $4,000 is $1,200. And with that, they would have reached the $1,200 limit per year for that particular for that category of expense. So if during the same year they wanted to purchase exterior doors, they would miss out on the credit for that because they would already be maxed out at the $1,200. But they could install one of the items that's subject to the $2,000 limit, such as a heat pump. So if they had the $1,200 credit for the installation, $2,000 credit for a heat pump, then they could maximize the credit at the total of $3,200. So, you could spread out the improvements from year to year because these are a per year credit. So if, let's say, in the following year, someone wanted to install energy efficient windows and then 2 energy efficient doors, the windows are $600, the doors are $500, that would bring them to $1,100. So they would have $100 more until they reach the max. But then they could also choose something from the $2,000 category as well. I do want to mention that the building envelope component costs do not include installation, but the other 3 categories do. And also renters are eligible to claim costs for qualified energy efficient improvements as well. Next slide, please. So here we see a list of some residential energy credit resources. The first item, irs.gov/home energy, is an excellent starting point if you're interested in looking into these energy efficient improvements. And also From this page, you can navigate to many of the other resources listed on the slide. There are some FAQs available, and then the Form 5695 is the form that you would use to claim the credit when you file your tax return. So you can find that there as well. We also included links for EnergyStar.gov and Energy.gov. These are not IRS websites, but they are government websites, and they have great information about the types of improvements that qualify for the credit. Next slide, please. This is a look at the EnergyStar.gov site. When you go there, you could click on tax credits for homeowners, and then you'll find additional types of information that you may not find at IRS.gov. It actually has some sample products there that you can look at. And there is a lengthy menu on the side that provides a great amount of detail for anyone who's interested in maybe installing some of these energy efficient improvements. Next slide, please. I wanted to take a moment now to talk about the High Efficiency Electric Home Rebate Act, or HERA. This provision provides point of sale consumer rebates to enable low and moderate income households to electrify their homes. It was also part of the Inflation Reduction Act. It's a voluntary program. It covers 100% of the electrification costs up to $14,000 for low-income households and 50% of costs for moderate-income households. This is a provision that you would receive at the time of purchase. So when you're in the store purchasing the items, that's when you would see this type of rebate. HERA is different than the tax credits that I was just talking about, and the IRS does not have anything to do with HERA or this part of the legislation. I wanted to make you aware of it because in the beginning, we did receive a lot of questions. There was some confusion about how it worked. And also, if you do receive the point of sale rebate under HERA, it can impact whether you can also claim the residential energy credit for the same product. So I just wanted to put that out there in case there is any confusion. The HERA webpage is a great resource if you want to look into that program as well. Next slide, please. Okay, so now we're going to talk about the credit for new clean vehicles. This is a credit of up to $7,500 for vehicles purchased during the tax year. This is also non-refundable, just like the home improvement credits. That means, it can reduce your taxes, but it will not be issued to you as a refund if you don't use the whole thing. Also, unfortunately, there's no carry forward provision for this credit. So it's a one-time thing. You get it for the current year, and if you're not able to use it all, then that's it. I want to mention that these credits are available. There are clean vehicle credits for vehicles purchased prior to August 16th, 2022, but we're not going to be discussing the details of those today. If you need additional information, you can go to irs.gov to see how to claim those credits or if you qualify. Next slide, please. So here we see some additional requirements for a vehicle to be qualified. You must have a battery. It must have a battery capacity of at least 7 kilowatt hours, gross vehicle weight rating of less than 14,000 pounds. It must be made by a qualified manufacturer and then undergo final assembly in North America. There is a published list of qualified vehicles and manufacturers at a website called fueleconomy.gov. And you can even search by a vehicle identification number. There's a lookup tool where you can just put in the VIN of a particular vehicle and it will let you know if it meets all of these requirements. I'm also told that the VIN stickers in most of these vehicles have this information, but I haven't seen it with my own two eyes. So I'm throwing it out there, but don't hold me to it. Next slide, please. So this is a screenshot of the fueleconomy.gov website, and the little link next to the blue arrow will take you to a page that has additional information, and it also has that VIN decoder tool link there as well. So I think it's super helpful. That's why I wanted to point out pointed out to you in case you're looking so that you can find it hopefully a little easier. I also want to mention a few other things about sales for new vehicles. First of all, the vehicle must be considered new. And what that means is that it has not been previously purchased, registered, titled, or used for any purpose. The seller reports the required information to you at the time of sale and to the IRS as well. So sellers are required to report your name and your taxpayer identification number to the IRS in order for you to be eligible to claim the credit. For vehicles placed in service on or after January 1st of this year, the dealer must also be registered with the IRS Energy Credits Online portal, and the vehicle must be approved through that portal at the time of sale. I'm going to talk a little bit more about that in a second, but next slide, please. I just wanted to give you a look at that VIN decoder tool. I know I'm talking about it a lot, but I just think it's a really great resource. So this is what it looks like. And you see, you just put in the VIN number and hit submit, and then it will tell you if the vehicle qualifies. Next slide, please. So to claim the credit for a vehicle that was placed in service before January 1st of this year, you file a Form 8936 with your tax return. That's it. That's all you do. But starting January 1st of this year, again, as I mentioned, credit eligibility and amount will be determined at the time of sale using the IRS Energy Credits Online portal. The dealer completes and submits a time of sale report online, and then it is either accepted or rejected right then and there in real time. The dealer is required to provide you with a copy of the report, and you will need it to claim the credit. So you want to hang on to that. If the vehicle qualifies, you have two options. You can claim the credit on your tax return for the year it was placed in service using Form 8936, or you can transfer the credit to the dealer so that they can apply the credit amount to your final purchase cost. This essentially allows you to receive the benefit of the credit at the time of sale, and the dealer is directly reimbursed by the IRS. You must still fill out the Form 8936 to report your eligibility for the credit and your decision to transfer the credit to the dealer. Now, this might be the most important thing I say today. So this is really, if you're thinking about buying a clean vehicle, this is really important. So even if the vehicle qualifies, but you do not qualify for any reason, you have to reimburse the IRS for the difference in the credit for which you're eligible and the benefit you received. So if you weren't eligible for any amount of the credit and you got the full amount, you would have to pay it back. Dealers are not required to verify your eligibility at the time of the sale. So it is 100% your responsibility to make sure that you meet all of the buyer requirements. The dealer is required to provide information about the modified adjusted gross income requirement, which is just one requirement for your information, but that's it. They are not required to make sure that you're eligible. So it's very important that you make sure that you are before you decide to transfer the credit to the dealer. Next slide, please. So lastly, let's talk about the credit for previously owned clean vehicles. The credit limits and the requirements are a little bit different than from the new clean vehicle. So the amount of the credit is the lesser of $4,000 or 30% of the sales price. It's available to all qualified buyers who are not claimed as a dependent on someone else's tax return, and it can only be claimed once every 3 years by the same buyer. Also, the credit is allowed if the sales price of the vehicle is less than $25,000. Next slide, please. Few more qualifications for the buyer. So if you're buying it, you must intend and use the vehicle. Use the vehicle. It's not, you can't buy it and then resell it. You cannot be the original owner, and the vehicle model year must be at least 2 years earlier than the calendar year when you buy it. So if you're buying it in 2024, the model year must be 2022 or earlier. And then lastly, it must be purchased from a dealer. Next slide, please. These are some resources for clean vehicles, irs.gov/clean vehicles. You might see a pattern there, irs.gov/clean energy, and here's for clean vehicles. So this is a great resource again if you're just trying to gather some information. There's frequently asked questions. There's links to the fueleconomy.gov, which is a great website, which has that helpful VIN decoder as well. So check it out if you're interested in clean vehicles or in residential clean energy credits. And I think with that, I will turn it back over.
Thank you, Kate. Appreciate that information. So now we will get to some questions here. Give me a second. So again, we are trying to avoid ones that might be personal in nature. So if I don't get to yours, it might be because of that reason, and we are going to follow up with you directly. But we do have a few here. Let's see, this one is, what guidance do you give employees who cannot obtain a W-2 from their employer, either because the company is out of business now or is non-responsive? Do you simply refer to complete a 4852? Erica, do you have any insight there? Erica, I think you're muted.
Sorry. Yeah, that's kind of hard to answer because we always ask for the employee to get, if the W-2 is not in the system, we ask them to get a letter from their employer to verify their wages and their withholdings. But if the employer is no longer in business, I guess you could submit like your last pay stub that shows, like, that could be another way of verifying your income and your withholdings. If your last pay stub shows your, like your total gross earnings and your withholdings. So you could maybe prepare a substitute for W-2, and then when the IRS questions your income and says, there's no W-2 in the system, you could provide your last pay stub that shows the income and the withholdings.
Okay, great. And Kate, have you ever seen that on your end either?
Sorry, hold on. Am I on mute? I'm not. Okay.
Nope.
I have seen this question before, and I believe there's guidance on irs.gov that says you can call IRS and they will reach out on your behalf to the employer, but that can take time, and we really cannot compel the employer to provide the information. There are penalties for not doing so, but again, that doesn't help you get your tax return filed. So I think using the substitute form is best, but calling the IRS might be another option. At least, there'd be a record of that, and then maybe, the IRS, and I believe the IRS does reach out on your behalf, but again, it's not a guarantee that's going to make the employer issue the W-2. So it's worth calling and requesting it, but I think the substitute form for W-2 is probably the best bet.
Great, thank you both. Let's see, Susan asks, are the energy credits only applicable to a primary residence, or can you take a credit for improvements on a secondary home?
You can take the credit for a secondary home as long as it's used as a residence. I don't think if you rent it out, I think there's special rules about that. So, but if you have two homes that you use as a residence, you are good to go. Yes.
I think, this being New Jersey, I'm sure there's plenty of folks at the shore that are interested as
Sure.
well. So let's see. What is the current amount of the earned income tax credit and the child tax credit? And is there a minimum earned income amount required to be eligible for either?
I don't know off the top of my head. I can get you that information.
No problem. That was asked anonymously. So Erica, if you send that info over, we'll, and that person follows up with us, we'll get that out to you.
I think,
Oh, go ahead. No, go ahead. I don't know it either, but I was.
no,
gonna say
yeah, I'm
iron.
going to go off my memory. Minimum to earn is 2,500 for the child tax credit. And for the earned income credit, I think, I can't remember earned income credit. I think the maximum is 6,000 for the earned income credit. For earning, I think the top for a single person is 14,000, but I can't remember anything more than that. If that helps any.
We can follow up on that and
Yeah.
make sure we get the exact details out to everybody. Mark asks, what are the solar panel tax credits? I get ads for things like that constantly. I wonder if it's legitimate or not. And they thank you all for your presentations and your helpful information.
So yeah, the solar panel falls into the residential energy, clean energy credit. I think, let me look back here. It is a legitimate tax credit, but I do want to mention while I'm scrolling through here. So it's 30% of the qualified expenses paid for the item as well as installation. I do want to mention one thing because I've seen this recently. You have to be careful though to make sure that you are going to have taxes to offset, because I had someone that the salesperson told them, hey, you can get this credit, and then they didn't have a tax liability. They didn't have any taxes, so they basically could not benefit at all. So I just want to mention that, to make sure that, you are going to have taxes to offset because it is a tax credit. But yes, there is a credit for solar panels, and it's 30% of the cost.
Staying on the tax credits, does a contractor have to provide an itemized bill listing exterior windows and insulation costs? Do only certain window brands or models apply here?
So I can't say for sure, but I assume, well, I know there are specs that are required of the product in order for it to qualify. So I presume there may be some models that don't meet all of the requirements. I don't know what they are offhand, but that EnergyStar.gov has, I think they have a good listing of the qualified products, and they also will list the requirements of the product in order to qualify, if that's helpful.
Appreciate that. And yeah, we'll make sure you guys get all the links and everything that were shared in the presentation so that you have those. There's definitely a lot of very good information up there as well. I believe we have time for one more here. Marilyn asks, she's trying to report sales tax from items purchased online. Is that allowed, and what form would you use?
So I'm wondering if she's asking because is she asking if there's a deduction for sales tax for items online? So sales tax is a state level tax, and I'm not aware of any deductions for federal purposes. I know sometimes if you live in a state that doesn't have sales tax, and you might have to but you live near a state that does, or the other way around. It gets complicated, but I'm not sure that there are any special forms for IRS purposes to report sales tax or deduct. I don't think you can deduct it. Erica, do you know something I'm maybe missing?
Yeah, I sales tax, I always I do kind of think about the state tax level. We generally don't consider sales tax I'm not really sure about the rules in terms of businesses either, but it's mostly like
Oh, that's a good point.
state
I was
level.
assuming it was individual, but you're right. There might be some considerations for businesses. So I would say, Marilyn, if you want to maybe reach out to the congressional office and we can figure out, get some more info and maybe answer your question a little better, that would be great.
Yep, happy to point you in the right direction, Marilyn. And we have contacts at the State Division of Taxation too. So if we have to reach out to them, we can do that. With that, it is 7 p.m. We're at the end of our hour here. I just want to give a sincere thank you to our panelists for joining us this evening. Thank you to everyone who joined from the audience. We really appreciate you taking an interest here. We hope this information was helpful to you. I know we didn't get to every question. We do see a number of people that had some more that are personal in nature, and we can reach out to you directly. But if you asked your question anonymously, we won't be able to match your name with our records. So if you did ask an anonymous question that didn't get answered, please follow up with our office. The number is 973-526-5668. Again, that's 973-526-5668. And you can also email us through our website. You go to sherrill.house.gov, Sherrill with 2 R's and 2 L's. Again, thank you to everyone. Really enjoyed seeing everybody, and we hope this was helpful. Have a great night.
Thank you.
Thank you. Bye-bye.